Well, hello, and a massive hello to everybody. How are we all doing? 50 pips rocking and rolling here. 12th of June, 2016. No trade calls and recommendations. A response for their own stuff. We're here for educational purpose only. So, what's going on, guys? Very interesting week ahead. Again, it's really all about onto Yellen and the FOMC. But again, there's a lot of stuff. You know, we've got some China data on Monday. Tuesday, we've got CPI out of the UK, core retail sales out of the US. On Wednesday, we have that claimish count out of the UK. We got PPIs, Empire State out of the US. We've also got crude inventories. We've got GDT out of New Zealand. You know, but it's really about that FOMC statement with the press conference, which is going to be very, very interesting. On Thursday, we've got more stuff, right? We've got GDP out of New Zealand. We've got BOC on deck. We've got unemployment out of Australia. We've got a BOJ press conference. We've got SMB, right, rate and press conference. We've got retail sales out of the UK. We've got, again, bank rate out of UK. So we've got BOE on deck too. And then we've got all that Philly Fed unemployment claims out of the US taking us into Friday. We've got all the CPIs and we've got Draghi speaking. So again, a lot of event risk this week with a lot of central banks speak. But again, mostly going to be dictated about the Fed. So before we start again, I'd really like to thank all the guys for sharing or liking the videos. At least it shows me somebody's enjoying the content, so it's always welcome. As we said, we'll try and keep these short, try and do 5 charts every Sunday. And I actually forgot, we need to do a live session because we'll probably do that next Sunday. So everybody hit me up on Twitter, send me a note on the blog if next Sunday sounds good for a live session. We can do a 1-hour live session on Sunday, something like that. So you know, we can also have our usual Q&A and just tackle anything under the sun. So what's going on? So again, the metals are getting a little bit of a bid. Instead of doing gold, let's do silver. I think something which is interesting on silver is just to talk through the confluence here, right? And we talked about the fact that we were stuck in this 18, 16, 14 range for quite a long time, right? We're looking for this to really rip out of the zone even last year, so it's just really been taking a time. Now, what was very interesting here in the latest rotation higher, right, towards that we've just witnessed here, is what happened is that we've got this move up and then we've got this retracement in this. Number one, it's back into mid, right? Number two, it's also the 50 back of that move from those lows, and also it's the channel, right? So let's put it back up just to highlight. So move up here, channel, fib, lows to highs, right? 1, 2, 3 things lining up. So everything is pointing towards a retest of those highs and then seeing if we can move out in extensions and print into the 19s and the 20s. So that's going to be very interesting. But again, with all the Fed speak and everything, don't underestimate the importance of this range of the 18s because they've been important for quite some time, okay? Now, another thing which is going to be interesting is, you know, S&P. Again, we've still, you know, contracts rolled. We've still got the old one here. But basically, what's interesting is, as we've been discussing, it's all about this 2100, right? And clearly, it looks like the bulls are having a little bit of trouble here. Now, remember what we've been discussing in a lot of detail. We talked about this ramp 2 weeks ago, right? And we talked about this low volume ramp with those overnight presses. And what we said is, it's still all about that 2100, but don't be fooled by this chop, right? Don't be fooled by this chop, because when we tend to move higher in these low volume chops, a lot of gaps up, moves up in the overnight session, as soon as the flows come in, or you know, anyways, the moves can really come back very, very quickly, and you can easily give back a week's gain in a couple of days, right? So here, what we saw is last week, as we were grinding higher, it looks like just taking out some stops, right? No real significant buying here. Then, as soon as we had little panics, you see how towards the end of the day, bam, we sold off, right? And once we sell off and there's nobody catching the bid, or it doesn't slow down, it can accelerate very quickly. So essentially what's happened here, right? This was 2 weeks ago, this is 1 week ago, and this was last week pretty much. What happens is we give back essentially this whole move, right? We're going very, very quickly, right? And don't be surprised if something happens that we give back this week very, very quickly, right? So again, I'm not saying that has to happen, but you know, it's fairly classic action the way this is moving. But still, you want to focus on what happens around the 2100. If we get any sustained break above that level, then no change really, those 2130s attract. But don't be surprised if we don't start getting bids into this descending trend line. Do not be surprised if 2050s print quick, and then we're going to be back to square one at our range, 2100, 2050, 2000, right? And then those moving averages are going to start to attract. But again, very, very interestingly. And in similar nature, you know, what's going on crude, we talked about the fact that it just looked like the market wanted to take out all these stops above the 51, and that what was going to be important was how the market followed through. Now, it was caught a lot of people off guard, caught us off guard a little bit too, because we did get a strong bullish close above the 51, but we gave that back straight away the next day. And what we said here around this 51 is that the next $3 to the upside or the downside can come very, very quickly. So going into a week, no change, we look at this 51 kind of like the 2100 on the ES. As long as this holds, as long as any rally into the 50 holds, we'd expect us to come all the way back into the 48, 47s, and then that's going to be the pivotal level. Remember, for us, the big zones are daily closes above 51 for a move into the 55s pretty much, or day closes below the 47 for a move right back into the 42s. Now, what else have we got of interest? Yen, just keep an eye on yen. We're pressing here. It's all about this zone. We'll have to see what happens with Yellen and with the BOJ. The way we're looking at it really is, as long as we don't get day closes below the 105.50, we expect this to try and continue to bounce. If we start to get day closes below the 105.50, we expect 105 to give way extremely quickly, and if day close below that, then it could get fairly ugly to the downside. But as long as those don't, we expect the possible surprises with pops back up into, you know, these moving averages into these levels. Okay. And last but not least, euro, no change in outlook for us. We've been talking since the 3rd of May that we put in a swing high, and we're headed lower to print into those 100, 200 moving average. We discussed in that Sunday update how, as far as we're concerned, we're still in a broader sideways chop zone. You can see it better on the weekly. Chop, 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 sideways chop. But that just being technical, just being mechanical, after those shorts, it was a very nice ride, and as we were basing here with the daily close at this 200 and all this basing action, the asymmetric risk reward was to trade this with either tight or slightly wider stops for a move back into mid-channel, for a move back into these 1340s. At that point, that was done, heavy. Our outlook now is for a move back into the 1200s, 112s. Again, keep in mind, we're going to have a lot of wheeling and dealing on Brexit also, and a lot of people are focused on what that means for cable, but we don't know what that means for euro, right? So I'd be very, very cautious. I would not be surprised to see us continuing to chop around in this area with all this uncertainty, and unless something clear comes out in terms of Brexit or in terms of Yellen or in terms of the BOJ, I would expect to see a lot more choppy trading in this area, right? Possible downside 1050, but really we would expect us to stay pretty much contained in this area here unless we get a little bit more clarity across the board, okay? Just because a lot of people wrote in asking about that cable, again, as we said, the we're looking for shorts there. Our outlook hasn't changed for, since the beginning of the year really, or since we had more clarity on the Brexit vote. on when that would take place, and we suspected that we would stay choppy here, right, inside this range, and we would not have been surprised if we went into the actual vote somewhere in mid-range, which is pretty much where we are now, right? I think the interesting zones here are rips back above 145, pukes below the 140s, inside here, a lot of choppy action. You could get into a lot of trouble. Keep in mind, a lot of brokers are going to be adjusting their margin requirements on these, on every pair, but especially on cable. And I think there are a lot more interesting ways to engage, a lot of more interesting ways to allocate capital than try to flip a coin on something which is likely going to be very volatile and with much higher margin requirements than usual, right? Remember, it's slow and steady, about the long term, and about doing something in a systematic, repeatable way, not taking shots at, once in a lifetime kind of events. That's not really the way you build a career, even though if you get lucky, you can milk that for a long time, but that's not slow and steady, okay? I hope everybody's having a great weekend. I hope you have a great rest of the weekend. If you have any left, wherever you may be, thank you so much for all the support, and talk to you guys soon. Take care. Bye-bye.